afternoon, everyone. Thank you for joining us today. We're here to dive into the essential topic for all of us in the real estate industry. We're going to talk about commercial property insurance today. So who's ready to learn about insurance rates? Yeah, so at least we're here for property rates and free food from Antro later. So thank you, Antro, for sponsoring. I'll try to make this topic as relative and as simple as possible and not to bore you too much. We'll learn about why insurance rates have been on crack this year. So before I start, you should know a little bit about me. Like Italia said earlier, I've been in commercial insurance for about 8 years now. I work for New Century Insurance. If you haven't heard about them, we're a brokerage nearby. We're licensed for over 35 states. So yes, we search far and wide for competitive markets for all types of businesses. And I got my major was in Bachelor of Science, specifically in biology, like all Asians. I stumbled into insurance after managing a couple of restaurants, and through managing, I really did fall in love with understanding how businesses work and all the factors that matters within it. Okay, over the years in insurance, I've touched many different types of accounts. So for today's purposes, I'll focus on commercial property insurance. These are the type of buildings I've insured before. The first image is the office building in the art district. It's couple stories high. They painted the roof with rainbow colors. I don't know why, it makes it look fun. I also have insured hotels in Santa Monica and in Ontario. That's the Ontario Hotel in San Bernardino. And also, of course, your Main Street buildings or Main Street strip malls that includes retail stores, restaurants, offices, and of course, your multifamily dwellings, apartments, and HOAs. So pretty much all the buildings and properties you show or bring your clients to, we insure. So today, we're going to cover several key areas, from seeing global factors affecting insurance, specifically in the California market, dynamics of Department of Insurance and our carriers, what you're going to anticipate for 2024. Okay, so I don't know if you've noticed, but there's been a lot of catastrophic losses. That's your hurricane in the south. There's fires in Hawaii. There's in Greece, Canada. All these losses are big in particular region. Those are considered as cat losses. And that's war included as well, not just climate. So why does fire in Greece and Canada or war in another country matter to us? It's because these events are all property related. Many of our carriers are international carriers, and if these carriers paid out the loss of a whole county, there's definitely a huge financial loss to their book. These global events directly impact property rates, and as they assess the risk post catastrophic losses, as they assess these risks involving these disasters, so do the premiums. Secondly, insurance carriers have their own insurance as well. This is called reinsurance. Just like us, if there are any major losses to our policy, like our home or auto, once renewal comes around the corner, our rates will also go up immediately. So, and I know it's not like your clients did anything to absorb the rates from the reinsurance, but it's really the ecosystem of insurance and how they balance out their book. So it does trickle down to each policy holder, so to speak. Then, of course, there is our COVID during pandemic times. And I know it's pandemic and COVID's kind of behind us now, and we don't really need to go into the nitty-gritty of it, but it did cause a ripple effect to our society. One thing for sure during COVID, sorry, I'm going to move this guy away from my screen. Okay, sorry. One thing for sure, during COVID, there's a lot of construction projects that happened. Myself, guys, hold on. Stick with me here. Okay, so during COVID, there's a lot of construction that had happened, besides the e-commerce hustle and, all that. But construction especially really did blossom a lot. Everyone was either remodeling, rebuilding stuff, adding ADUs, adding additions to their buildings, or even like revamping their hotel, like one or a couple stories at a time. So constructions and contractors were on high demand. Because they're on high demand, a lot of their projects actually extended for more months. Let's say you want to renovate it for 3 months, they had to extend it for a whole year. Because then on our side, on insurance, we kept getting endorsements saying like, hey, they're not done, permits are not approved, this part of the steps are not approved by the city, or they're kind of having materials shortage. So we had to keep extending these course of construction policies. Contractors were also dealing with the shortage of labor as well. And they've overextended themselves on multiple projects. So not just, let's say, even our office, right? For our New Century, we had our own renovations project, but then instead of 6 months, it went to over a year. So they were just in high demand. Meanwhile, during COVID, there's also inflation, and it happened throughout everywhere. So it also drove the cost a lot higher for everyone. So when these contractors are out rebuilding or refixing these properties, there's also property claims that they have to attend to. So the payout for replacement costs just continuously increase. So alongside of that, since we're on the topic of COVID, let me just bring in another trauma of mine. Today, remember back in 2017 and 2019, there were a bunch of little fires that started to like creep along in California. Then it was COVID. And then during COVID, there's more wildfires and throughout the states. Like our skies were pretty orange at one point. I don't know if you guys remember, but I didn't leave my house for about 2 weeks because I didn't want to breathe in air. And people who know me, I'm kind of like mitochondriac. That means I'm scared of anything health related that's going to damage me. So anyway, yeah, I stayed in for 2 weeks. I stunk for some time. But yeah, the fires really did cause a havoc in California climate. It really did a number to the whole state, from fires from Napa Valley to Silicon Valley and along the coast, even Yucaipa. And there were even fires north of us, north of Monrovia and Arcadia. So, usually these fires happen closer to hills or some coasts, but people who live in hills with those luscious yards, with those big mansions, those cost a lot of money to build, okay? So yeah, everything just were really expensive. And when you think about the city, okay, like let's say a hill is on fire, it wipes out a whole county, right? There's only so many contractors and builders who are readily available to help rebuild that one particular area. There's only like one way up and one way down. And everyone who's like local will charge more. Every contractor who's not local to that community are going to charge more for distance and delivery. So all these catastrophic losses changed our terrains and our ecosystem. And again, supply and demand. Also, have you noticed how long our winter is last year? Like just last year, I believe it was gloomy until June. Okay, I kept track of it because I needed my sun, and I was like, why is it still gloomy in May? And then when June came, it finally like came out, and our summer was quite short because right now like it's already dark again. So although we got a lot of rain out of it, and we fixed our reservoir problem, but it was actually a little bit too much rain for us to handle, because then we filed so many water damage claims this past year. And if you want a side hustle, become a roofer, and become it now, because they're on high demand. So currently, yeah, so that's where we are at right now from 2017 to maybe beginning of this year. And this year was when we hit the super hard market of property. In the past 20 years, this is the hardest that we've kind of dealt with. So, but yes, in terms of property, these orchestrated break-ins and all these theft claims all fall into property. So it's not just damaging the physical portion of a property, but also the stuff inside. So if I were to get a property, flip it upside down, anything that falls out, that's still property, and that still all affects what our rates. Oh, okay. Sorry. The question from the audience is, what do I mean by hard market? So insurance have different trends throughout the year, and every policy have different niches. Let me think of a property. I'll give you 2 examples. Okay. So let's think about workers' comp. a couple years ago, workers' comp was hard. Everyone didn't like their employees. They didn't have safety involved. They didn't have signs for the employees or hard hats. But after some time, people are starting to pick up, okay, you know what? Every quarter, I should have a training on how to pick up things, to look out for these signs, wear these protective gears. So over the years, I think at least the past 7 years, workers' comp have became a softer market compared to was harder market. Harder market means no one wants to write their risk. Softer market means, oh, okay, now workers' comp right now to this day, workers' comp have been so much better. People actually like their employees. They try to give them more benefits, try to keep them around. So that's what hard versus soft means. So, and another example is auto. Auto market has just been hard all around. Everyone keeps getting into accidents. They're distracted, and these autos are even getting more expensive because technology now is involved. So just fixing one car costs a lot more than it was years ago. So it's consistently getting hard. And even your mechanics, if you think about them, a few years ago, they're being paid like maybe $20 an hour. I'm hearing now the mechanics are getting paid $60 per hour. So everything is just harder and more expensive rather than workers going from hard to soft, because the trend of that industry has been a little bit more favorable to the employees. So in terms of property, because of all these catastrophic losses and the inflation, shortages of materials and labor, all this is inflating the costs, and it's getting a lot harder. None of the carriers are like willing to be like, okay, now I'm going to insure a building that is old. So that's what it means between hard and soft. I hope you guys understand or try to or get what I'm trying to say here. Did I answer it? Yeah, maybe. Okay. Okay, let's have a little break, a fun little break. Okay, so everyone pull out your phones. Or if you already have it on, shame on you because you guys zoned me out. Okay, so you're gonna have to turn on AirDrop.
My question is, how do you define commercial property and residential properties for condominium units and apartments? For insurance purpose, for one.
Okay, so do I have to repeat? Oh, okay. So with apartments, 4 and less is residential. If it's 5 or more, that falls into commercial space. And if you own the apartment under a trust or LLC, that's sometime like a gray area, we can still write in commercial space. It depends on how you want that. And maybe the rates are better on the commercial side rather than the residential side.
So same apply to condominium units. For example, you have more than 5, then that'll be considered as commercial property, not the residential.
Are you talking about individual units, or are you talking about HOA as a whole?
For example, HOA has 10 units, right?
Okay, that's
Would
commercial.
that be considered commercial?
That'd be commercial. Because if it's
even it's 100% owner occupied.
Are you talking about the HOA, just the building itself, or the each individual units?
Well, I mean HOA from a HOA point of view.
Oh, HOA, okay, HOA, that would be commercial for sure.
Even it's a nonprofit organization.
Yeah, because the HOAs are association. You're nonprofit. You're filed differently. You're commercial. Because then with HOA, you need the directors and officers and your crime policy with the policy. It could be separate, but some carriers can combine them together. Travelers and Hanover's are one of the carriers that can do it.
Well, my question is there any way we can find an affordable insurance policy? I mean, it's in Southern California. Last year, I mean, this year, my insurance premiums increased. I mean, they declined to renew my policy, right? So I look for the, other venues. And the price vary from 40% to up to 100%.
I know. Yeah, it's hard.
And that's ridiculous.
It is. I do it this whole year. Yeah, I know. I've seen. Okay, I'm gonna return to my presentation a little bit later. I'm just gonna give a personal experience. So this year, I tell all my clients, if you have a renewal quote from your carrier, no matter if it went up 20% or 30%, keep it. Because if you shop the market, it's going to be way over 20, way over 30. And on top of that, once you bind with the other carrier, even if it's like 15% more than your expiring, or even like kept it with your expiring, they're going to send out inspectors to your property. They're going to find something wrong with it. And then when they find something wrong with it, they're like, okay, well, you quoted it wrong. Or you actually have a bad roof or older roof that I didn't see while I was underwriting. And that's not your fault. That's not agent's fault, but that's what the carriers are looking. They're looking for faults here. Once they see a fault, they'll non-renew for the next year or increase your premium. So I say to people, please don't waste your time to search for the lower cost. It is what it is right now, and it's really sucky. I don't want to pay higher insurance. I don't want my clients to pay higher insurance, and explaining it to them, it is a hard market. This is what we're dealing with. I hope to see it go lower, but I'm going to tell you later that it's not going to go lower next year. Yeah, so that's the hard part. It's having these difficult conversations and telling them this is the facts, and this is why I'm here today to tell you why it became like a shit show. Yeah, you'll hear it later. You'll see why. It is hard. It is hard. I do feel your pain.
What is the reasonable increase? I mean, would that be a 40% from
That you
previous
gotta
year, or-
email me later, sir, and I will look into your policy for you and see if it's
Well,
reasonable or not.
I'm talking about same policy, same coverage.
Yeah.
So what is the reasonable increase?
Okay. There's so many
Because it is
factors, and I could
variation
go
from
down the rabbit hole with
40%
you
up to
here.
100%. So it kind of,
What's your name, sir?
oh, my name is Yang Li.
Young Lee. Okay. I can talk to you afterwards, but I can give you a very roundabout answer right now. What's reasonable? It's hard to tell because I don't know which carrier you're with. If you're with a basic carrier, a standard carrier, or
I
like a
used to
good
have an
carrier.
Allstate, and then I have to they decline to renew the policy, so I have to shuffle the other.
Okay, this is
insurance.
becoming more of a personal.
Right now, I have a traveler, so
Yeah. Okay. Meet me after. Meet me after. I'll get your email. Send me your policy, and I'll see how much you're being paid for, and limits, your square footage, your bills. All that goes into the factor. I can't just tell you if it's justified or not, because there's so much factors into it. And I can geek out on it for quite some time, but I don't know if everyone else wants to know everything. So yeah, because sometimes when I talk to people, they come up and ask me like, oh, can you review my policy? Is this enough? Is this justified for the price it is? And then to be honest, if it is, I'll tell you, keep it. If it's not, then I will look into other policies or carriers for you. Okay, New Century girlies, you guys want to stick? But anyway, it's just supposed to be a fun video, 30 seconds of people talking about the property insurance, and they're giving off some type of energy to it. It's just a fun little social media break because all of us have short attention span, like myself. Okay.
Audrey?
Hmm?
Audrey?
Yes.
We accept yours, but
Okay.
we did not see anything.
You guys don't see anything? Like,
Is a video?
yeah, just a video. Or maybe you guys can like sandwich yourself in front of these New Century girlies. They can share their video with you, and you guys can watch it. Anyway, whoever has a video, you guys can watch it. It's 30 seconds long. It's pretty much these two guys talking about why markets in the California market is exiting compared to people in Florida where there's hurricanes. How come markets are not exiting there? So they pretty much like put out an energy thinking that, oh, our carriers in California is gonna make like they're gonna make earthquake or something happen. Okay, so long story short, not to really bore you guys or anything, our Department of Insurance is responsible for approving rates. Each time our carrier needs to increase their rates, the department allows an increase of up to 7% only. So if the carrier needs more than 7%, they actually need to go through a long, tedious amount of documentations and approval through the courts. So instead of going through months of processing, carriers are filing at 6.9 rate increase each time. So let's say the carrier wants to increase their rates to like 30%. That's 4 times the time needed to catch up to the rate actually needed to keep their book balanced and profitable. Right now, since we're so behind, we're actually 2+ years behind on rates. This doesn't account for inflation. So I don't know if you guys are following, but like sometimes policy needs to be increased 14%, 20%, just because of the way losses are for that particular carrier in that particular niche. But the department is only allowing 7% increase each time. So what the carriers are doing, they're only going to put in a rate increase for 6.9. And each time this is getting processed, it takes months. So if you're constantly needing to increase these rates, but it's Department of Insurance is taking their sweet time approving rates, and they're taking their sweet time approving rates because we're in the state of California. And the department really values clients over entities. So the department favors our clients more, hence they're not willing to increase rate once it's being sent in. And so on one hand, carriers need to are losing profit from everything I've been telling you earlier: fire, flood, rain, climate, war, you know. And then on the other hand, Department of Insurance are just not approving or approving fast enough. So carriers like Farmers, State Farm, Nationwide, they're all like, you know what, screw you, Department of Insurance. We're not going to write in California anymore. It's not profitable to us. And it leaves the rest of the carriers who haven't exited the market bombarded with an influx of quote submissions and accounts from these carriers, KBIC, Farmers, State Farm, because they just can't write it, right? Since the rest of the carriers who remain in California, they're absorbing all the losses. And as they're absorbing losses, what can they do to stay in the game? They increase premium. So the remaining carriers have to either work with the current stress or exit the state. And in order to still remain in this hard market, carriers are starting to comb through the book, taking less risk on older buildings that are built prior to 1990s. That is like your prime age of being 30 years old and thriving. But they just don't want that anymore. They're considered old. They're taking less risk on high exposure tenants. They even looked into your neighboring tenants. Let's say I'm an office, a little precious little office, like real estate here. But next door is a smoke shop, or next door neighbor is a laundromat. Those are high exposure tenants. They're not just looking at you now anymore. They're looking at your tenants if they're upkeeping their property right. Because if they're not upkeeping their property right, it invites high exposure from like the pedestrians, or it invites just a lesser value for the rest of the street. So they're looking at your neighboring tenants as well. They're looking at bad roofs. If there's like watermarks on a roof, they can see it on through satellite. They're not going to like that either. And any property near a brush area, those are considered as high risk. So if you are on Google Maps and you zoom into a property and you see there's a hill next to it or some dry land, that's bush. A lot of them are bush now. They just deem everything as like quite bad. Or they also look at crime rate. So if you're closer to LA City or even LA County, some places are unfortunately rated a lot higher. But carriers right now, they do love the new builds, the clean, updated, maintained buildings. They like to know that your clients, your buyers, investors, your building owners are actually taking good care about that building. Like they make it look good on the outside and as well as the inside. So essentially, if you can't even bring yourself to show your VIP clients to these type of properties, then most likely these carriers will also see it as like a lesser value property. Like I said, these undesirable properties tend to have higher exposures. So, you know what's also really crazy, and I think you guys have heard about California Fair Plan. Even now, California Fair Plan are declining quotes. And they used to be like the last resort. Everyone will go there. Has really, really basic coverage, pretty much little to nothing. And this is our go-to carrier when we can't find coverages. But recently, I also got a decline from them. I'm like, okay, then where am I going to go? That's nuts, right? And this is my experience. I had a lender reach out to me. He has a mixed-use building in the Bay Area. This is like 5 stories high, has, I believe less than 30% vacancy or occupancy. And this building was built in 1013. What was it? How do you do math right now? Sorry. It's like built in 1913. There we go. 1913. It was over 100 years old. So this building was old. It was in Bay Area. It had low vacancy. And guess what? He never had coverage. And because he never had coverage, I think he just didn't okay, insurance policy, they're expensive. Yes, I understand that. But two, he never really cared to put tenants inside, make it more vacant. That tells the carriers that you don't actually care about your building. You just let it ran and you just let it sit. And it shows. So they don't want it. And I got the decline from for Fair Plan because they're like, oh, the vacancy percentage and for the duration of it is too long. If you were vacant for maybe like half a year and you had a plan to get tenants in, but maybe COVID happened or whatever happened, you have a storyline and I have a storyline to tell the underwriter. I can make it as juicy as possible, as desirable as possible. But if I have nothing to work with, then I can't just like pull teeth here. So yeah, be careful. If these buildings look sketchy, abandoned, unloved, these carriers can see it. And they can see it whether or not you have insurance. But in my particular case, I was able to get them general liability, which is okay. But property side, you need property insurance in order to even sell your property. So I tell them and I suggest to them, you need to take care of some maintenance, first of all, clean it up a little bit, have some sort of 3 months plan, get some tenants in there, show that you're active here. And then we can try it again and maybe he can finally sell this property. So that's where this comes in. And to answer your question earlier, it is hard. It is a hard market and it is just the way it is at the moment. It's imperative to just brace your clients on the quality of the property that they're purchasing and taking consideration of the insurance premium to the overall annual costs. It's no longer like a couple hundreds for a single family home. It's like hitting the thousands now, sometimes even triple the amount. And it's crazy. And I'm also just as baffled. It's best to get as much information on the property as possible when you submit for insurance quote. For now, we really need a lot of lead time to get these quotes for you, because some properties just demand more underwriting and storytelling and convincing our underwriters. With carriers exiting the market, like I said earlier, it's just over bombardment of submissions and accounts. And if these submissions are not full of information, our underwriters are so busy right now that if you don't give us all the information, they already have a stack of things to do. They're going to put yours at the end of the line. If you're just going to tell me, okay, this is a building and it has tenants as a description, rather than, there's a restaurant business or they plan to do this for this building, then they're just gonna, okay, you know what, I'm gonna figure this out later because I have other things that has full information and I can work with it. So if you can, please know, and if you're trying to like close escrow quick, it's essential that you get a solid bindable quote as soon as you can. So if you see the building's old, try to ask for how old is this roof? When did you do updates to your electrical, your sprinklers, your plumbing, your HVAC? And if you see sprinklers on the building, like right here, just ask them like, hey, when was the last time you had annual sprinkler report? Because those are really important too when it comes to claims. I had a lot of people call me on a Thursday, late afternoon, 4 p.m. They're like, hey, Audrey, I need to close tomorrow. And I'm like, bro, like, I don't think I can make magic happen, but okay, absolutely. I can get a quote. Let me work on it. Like right now, let me jump on it. Even if it's an ugly property, I can make it happen. But now you got to add in a prayer and you got to understand. Why are you laughing at me? Now, you got to ask. You got to ask the underwriter, prayer God, and hope that your agent has a really good relationship with their underwriters. Because right now, I still have underwriters where I can call and be like, hey, you know what? I need something right now. They'll be like, okay, is it good property? What do you have? All these information. I'm like, yes. Boom, they can give me a quote. But if it's more of a demanding type of policy, I need to work with them, have open conversations with them. And sometimes lenders, not to SHIT on you guys, but lenders, sometimes they ask for a lot of criteria on these properties. They want like replacement costs. They want like, higher limits and all these other things. And I'm like, you know what, this property is really old. I'm getting declines from all these markets. Why are you asking for these type of, requirements? It's just not needed. It doesn't make sense for this property. And I know they want to fit everything in a box, but I've had many times negotiated like, hey, it doesn't always fit in this box. Let me give you this quote instead. And then they approve it and it's fine. So, but this all takes like a lot of conversations, a lot of negotiation and understanding of the property and what's needed. So for you and your clients, like everything else, be proactive and try to get as much information as you can. Your buyers will thank you for being very knowledgeable and getting ahead of it. And being efficient, knowing how to get things moving. You also need to tell them to maintain the property after it's bound, because maintaining is very vital. Tell them the insurance carriers are conducting more inspections on these properties. And these inspections they send an inspector to your property, do these inspections, and they recommend you to fix certain things. And these recommendations usually checks out your annual sprinkler test. If there's a crack on the pavement, please, cover it. If the swimming pool doesn't have a gate, please get a gate around it. If that tree is going to hit the corner of your building, please get it kind of trimmed down. And to see if your fire extinguisher are up to date. These are some simple, but these do lead to exposures if you don't take care of them. And when your clients are getting these recommendations, please complete them as soon as possible, because once they leave it to the side, they don't complete it. When it's time for a renewal, your carriers are going to find every damn excuse to not renew you. And then you're off to the wild again with no insurance, or you're scrambling to get your insurance. So yeah, if this property is yucky, you got to do a little extra work like the rest of us. So that's just the truth. To sound so doom and gloom, but
I have a question here.
Yes.
Audrey, on the Zoom, it said, Joanna asked, so 6.9%, is it reasonable? Can they refuse to renew?
the 6.9 is from the carriers to the Department of Insurance. The carriers want to have a high increase or a higher rate, and they need it to be approved. So are you saying, is the question asking if the 6.9 rate will be approved by the Department of Insurance?
It just says, so 6.9% is reasonable. It doesn't say, what this day referring to?
Oh, okay.
Yeah.
Let me re-explain that then. Okay. So 6.9 is referring to carriers requesting a rate increase. And the max you can increase at one time is about 7%. If you want, and if this is for them to submit the request instead of going through a whole process of documentations and going to the court to get it approved. So this is more of like the simpler way of getting it approved, but it has to be under 7%. So I say 6.9. So 7 and above, it's a whole nother process to do it. I hope that makes sense, but that's between the carrier and the Department of Insurance. No problem. And then, so the forecast of 2024, I would love to give you guys some good news and everything and end it on a great note. But yeah, property is still going to be a hard market, and it's going to be hard next year. And I hope it's not going to be hard the following year. I do hear some carriers are thinking of coming back. I don't know when, and I don't know what policy line. In terms of property, I think Nationwide is coming back, but I think it's only for like the retail part of it, not like the tenant inside, not the building outside. So there are conversations, they are trying to come back. But right now they're still waiting it out. Let's see. Yeah, so building owners will have to update and maintain their properties. That's just pretty vital. So because there's just no shortcuts with maintenance, because there's no coverage for wear and tear. Be proactive with maintenance. Again, if you can't bring your VIP clients to these properties, most likely the carriers will have a hard time writing them too. So, but hey, these properties now are better maintained. They're more aware of these exposures. So hopefully, because we're in a hard market now, people are seeing that, okay, you know what, my roof is kind of old, or my plumbing kind of needs some work. then eventually we will all get there. It might be a softer market later. But for now, it is just a little. And real quick, I'm not trying to bore you guys too much about property insurance, but so far I've been kind of talking about property, and I think most of you guys imagine property to be a completely built out property that's like standing on ground. But property insurance really starts with the pre-built, like a vacant land. You need property insurance for a vacant land. You need insurance when it's during a course of construction. There's different policy lines that come into play when it's in construction. And once the construction is complete, it's considered a vacant property because there's no tenant inside. So there's a different type of policy for that as well. So up until the point where you get to like 70% occupancy, then that's when you can have a full standard lesser's risk policy. So each of these stages have different type of policies in it that plays a part of all this. So that's just a real quick, like, if you don't know, now you know type of knowledge, and you guys understand what part of the insurance stages you guys are at when you guys are showing or buying like an empty lot. Oh, wow. I've nearly talked for 50 minutes. That's incredible. It feels like 10 minutes up here. But anyway, yes, I work for New Century Insurance. This is our team. Not everyone is here, but I brought some New Century girlies here, and they're sitting right here. If you guys can raise your hand, and maybe you guys can make friends with them later. If you guys want to chat with them, they know just as much as I do. We work in a team. We're in the same office. We all sit next to each other. So if I have a complicated account, I stand up. I'm like, hey, have you guys written anything with, I don't know, something crazy marijuana inside, right? And then someone will be like, oh yeah, I actually have. And then we'll have a conversation right then and there, really easy. So this is us. No individual is greater than the firm itself. That's kind of our motto here. And we've been serving the community for over 35 years. And sometimes when I drive around SoCal, I point at buildings or things on the billboard, and I think to myself, like, oh wow, I actually helped that business grow. I help protect our business. It could be, property, workers' comp, whatever. So anyway, to be honest with you, like that's kind of like the pride I take in what I do. But that's beyond just property, but property is very, very important. And let's see, one more. Yeah, so thanks for listening in. Again, my name is Audrey. You guys can pull out your phone again. This time you can get my phone number. Yeah, so because there's this QR code. So you guys can email me if you guys want, add me on LinkedIn. Use and abuse my team here. Yeah. If you guys have any questions, please send it in the chat box.
Okay, one more question.
Oh, yeah.
Yeah, it's from myself.
Okay.
For the fire extinguisher,
Mhm.
some unit they put their own. Is it a compulsory for the homeowner? I'm talking about units like 5 units or above. Is it compulsory for owners to provide fire extinguisher in each unit itself, or in the common area will be good enough?
Okay, so to answer that, you have to check with your county. Sometimes the county have different square footages per fire extinguisher. So wherever your property is, check with them. But yes, I think putting it into the common area is fine. But in terms of the number, in terms of square footage, you'll check with the county, their
think-
criteria.
HOA will take care. HOA,
Yeah, so common.
no, inside the unit. Yeah, you're supposed to have one, the HOA will ask somebody to install, because I own one unit before.
Are you
They
talking
get-
about the
You
carbon?
mean the common area we still.
It's yeah, common areas like the hallways. Yeah.
Two. Driveway and then that two walkway.
Okay,
So it's not required. Usually you have their own.
Yeah.
okay.
Any difference if there's no HOA, like a 4 unit, 5 unit, comparing to HOA's property?
HOAs have their own, like, I guess, what was the word I'm looking for? Regulations of it. What is that? CCNR?
More than 4 units, then it's considered commercial.
Yeah, over 4 units, over 4
Just like a
units.
loan, right? Single
Right.
family,
Yeah.
Up to 4 units, then
Right.
you can qualify for a conventional loan.
Yeah, so what he's saying that if it's over 5 units, it's commercial, and yes, they do require fire extinguisher. It's just not in the unit, it's like outside. If you have an apartment for 4, you know what, just put one outside. They'll need it one day or another, even if it's 4 and it's considered as like a, if it's under an individual's name or LLC or a trust, you should still have some sort of like protective safeguard, or protective thing outside. Just not inside the unit. That's kind of weird. Not weird. I just haven't seen it.
Smoke.
So you should just keep one outside. Maybe someone will not use it.
Fire extinguisher, if you wanna buy it for a common area, you can put you can buy it from Costco, Home Depot, very
Mhm.
cheap. You put one and then make sure you save the purchase receipt.
Yeah.
Because the fire extinguisher, you don't have the tag. So you have the purchase receipt and then stick it on the wall or on the fire
Yeah.
extinguisher. So when the inspector come to inspection, they will see the
See it.
date.
Yeah.
Yeah, so that's way to provide the date and inspiration.
Yeah.
I don't know the other city where you have it. You get an annual signature from a contractor, you just sign, the tag, right, when you buy the extinguisher from Home Depot, whatever. Costco, then there's a tag. So every year you have to sign, because the inspector will come here and do an annual inspection. That's pretty, COVID period, but then post the COVID, I don't see any fire department come for the inspection.
Thank you. Any other questions? No? On behalf of Western Gable Valley Realtors, many thanks for Audrey's presentation today. Thank you.
Thank you.
There are
everyone.
more classes and seminars coming up. This afternoon at 1:30, that's webinar, New Laws for 2024. And on the 20th, next week, there is the ZIP form addition training. And on the 21st, Tuesday, meet and learn environmental risk from the transactions. Please do register and come. And thanks again. And for our appreciation, okay, I will present this certificate of appreciation to
Oh.
Audrey.
Oh, nice. Thank
Okay,
you.
please come
Oh,
to
yeah,
the
yeah.
picture. Okay. Okay. Thank you so much. I hope to see you all next time. Bye.